Rob, we've had a bit of a pullback today following that long weekend. Of course, we had Wall Street closing a bit lower last night. Is this to be expected following the recent strong rise we have seen in world markets?
Yes, I think so. The rand has been very strong at the moment, and obviously as it weakens, some people are starting to take money off the table. And last week we saw a flow of nearly 6 billion coming out of the equity market from foreign flows. So it looks like a lot of profit taking coming into the market.
Of course, we had those US jobless figures on Friday, and 247,000 workers lost their jobs in July. But that was against expectations of 320,000. Why are we not seeing more risk appetite at this stage, do you think, Rob?
Well, the market's had just such a huge run. I think people have put a lot of money into the market over the last few weeks. And even though there has been good numbers coming out, people are starting to take some off the market and just taking some profit. And you want continued numbers all the time. So if we get good numbers the next time around for the jobs, and we need that all the time. We don't need inconsistency. So we want consistency in those numbers, and then so the risk appetite will come back. People will stop taking that profit.
Of course, we do have more data coming out of the US this week, including manufacturing data and retail sales data. So do you think the market will be paying particular attention to those retail sales figures to see whether consumers are starting to spend again?
Yes, definitely. I think the White House came in last week to say that they still expect unemployment in the States to be about up to 10% by year end. So the consumer is still under a lot of pressure, and they'll be looking closely at those retail figures overseas, as well as the retail figures here in South Africa, which also I think are going to be very weak.
Because our retail sales figures out tomorrow. Do you think we're going to start to see the impact of the 450 basis points of interest rate cuts that we've had since December last year?
It's difficult to say. I think we're still lagging behind the rest of the world at the moment, and I think there are going to be poor numbers coming out of the retail sales environment.
Of course, as Alicia was saying a little bit earlier, all eyes are really going to be on the MPC this week. It meets Wednesday and Thursday. What's the expectation of Nedbank Capital? Do you think that they will cut interest rates at this week's meeting?
We do think there is space for one cut by the end of the year. At this meeting currently, I don't think so. I think everything will be kept the same. The problem here is that the CPI, although coming down, Eskom has increased their rates by 31%, and that's going to keep that CPI up slightly. So it'll be very interesting to see if the Reserve Bank does make a cut, but I don't think there will be a cut currently.
But you do think there could be one later on this year, though?
Yes, and maybe even a second one late into the December period. So maybe 1%, but definitely 0.5%.
Of course, at the same time, we will be having mining production figures coming out. We have the retail sales figures on Wednesday, and today we have the manufacturing production figures, and they're all likely to continue to point to a weak South African economy, aren't they?
No, definitely. I think the manufacturing environment is very difficult at the moment in South Africa, and the mining production numbers have been poor. Not a lot of increases in production in only one or two base metals. There's been a slight increase, but nothing really that's showing that we're coming out and starting to build inventories for export.
Of course, at the same time, we're in the middle of South African reporting season at the moment. We had results out this morning from Group 5, also from Italtile. The Group 5 results, though, looked pretty good, in line with the expectations. And, of course, it did have a trading update earlier that pointed to a strong rise, but still going quite well for some construction companies in the economy.
Yes, Group 5's numbers overall were very good. As expected, they slightly improved from the numbers that we thought. The only really thing to worry about there is the order book going into past 2010, which looks slightly thin. I think the year end for the current year, it's about 8.6 billion. And looking forward, it's 11.2, so slightly thin looking past 2010, but otherwise a good set of results. And obviously, if you're in infrastructure spend and World Cup projects, it's helping a lot.
And of course, we have seen quite a lot of those Middle Eastern contracts cancelled for most of our construction companies, although Murray and Roberts did win a Middle Eastern contract a couple of weeks ago. So, I mean, post-2010 and post the infrastructure spend, we really will be looking for more of those contracts, won't we?
Yes, I think so. Maybe we'll get some more infrastructure spend on the outskirts of the cities. A lot of it's going into preparing us for the World Cup, and there is still a lot of infrastructure that needs to be done in the poorer areas of South Africa. So there could be more spend coming from there. But you would like to see some foreign interest coming in, whether it's even from Africa, from Angola and the outerlying countries just outside of South Africa. So we would like to see that order book grow as well for some of these construction companies.
Now, of course, those results from Italtile, obviously a good indication of how consumers are going at the moment. And they don't look very bad on the face of it. Profits down 6%, but in the current environment, I would think that was pretty good.
I thought they were quite a solid set of results. considering the environment that we're in. And it just shows you that they are quite resilient and more resilient than people think, that business model of JSE. And obviously growth going forward for the next 6 months is going to be difficult, but they do see it improving later into next year.
How about costs? Have they been keeping a tight rein on their costs?
Well, they are keeping a good rein in costs. Obviously, when they're importing tiles from overseas, they're bringing a different grade or sourcing that at a better price. And obviously, just cutting costs, a little bit of labour as well. And those costs look much better at JSE than they have been for a while.
Now, some of the results that we are expecting, they may still come out this afternoon, are those from Bell Equipment. And they did have a trading update last month, which points to a pretty grim set of results.
Yeah, they did look quite poor on that trading update, which is quite interesting. If you saw Caterpillar overseas, they started to see some green shoots and some improvement in their numbers. However, the Bell at the moment, nothing at the moment, and obviously the miners locally are not using any of that equipment. And also, we'd like to see those mining numbers that are going to come out tomorrow, and to see if those production numbers are even weaker. Obviously, then it's going to affect Bell Equipment as well. So I don't think they're in a very tough market for the next 6 months.
So, Rob, do you think that the short-term focus has perhaps moved away from the corporate earnings onto the economic data that's coming out at the moment to see whether it can actually support companies going forward?
Well, I think so. Earnings looking forward are very important, obviously, for an investor. And if the economic data just does not follow up, even with the slight earnings increases, it's going to be difficult to invest with a long-term view. So I think that the economic data, especially in South Africa, must be looked at quite closely.